By the time you watch this video, the Bank of Canada has most likely announced their interest rate decision on June the 5th, 2024. This has led many Canadians to be wondering where exactly rates are going in the future and whether or not they would make a cut on June the 5th or wait until July or possibly beyond that. One of the questions that I believe is not asked enough is how much would an interest rate cut actually save Canadians when it comes to their actual monthly payment? Let's break that down in an article that just came out on townhouses.com. I'm Michael Ouzas, I'm a realtor here in Toronto. If you're ever curious about what's happening on the ground level in Toronto real estate, especially as this rate announcement comes out and what kind of effect it's been having on the Toronto real estate market, you can click that first link in the description down below to book a call with me anytime that works for you. This article came out on stories.com and it breaks down how much an interest rate cut would save the average Canadian homeowner. And even though they are using average Canadian home prices, it is really good to show an illustration on what that rate decrease, if it does happen, could mean when it comes to your monthly mortgage payment. This article does mention that Canadians from coast to coast are eagerly anticipating some relief on the interest rate front come Wednesday, June the 5th. The other piece in this article is it mentions that this is a big announcement because there is a chance that we get the first rate cut since March of 2020, and rates have gone up significantly since that time. It's also had a major impact when it comes to pricing in Canadian real estate across the board, and most notably in cities outside major centers. And we did see major increases outside of major city centers, and most notably in areas outside of Toronto. Looking outside of the Greater Toronto area really presented a challenge for buyers when it came to pricing. We did see the prices decrease much more significantly than they did in areas like Toronto because the peak was higher and the trough has been even lower. This also goes on to say that it's safe to say the spring showers didn't bring the usual flurry of activity in Canada's real estate market this year. Persistently high interest rates are largely to blame. Relaxing the rates in the coming months is expected to be slow and steady. It's unlikely a summertime rate cut of the expected 25 basis points will open the floodgates to a slew of would-be buyers who've been waiting on the sidelines, but you never know. What exactly does that mean for the average Canadian homeowner? According to ratehub.ca, a homeowner who put down 10% of a down payment on a $703,446 home, which is the average cost of a home in Canada in April 2024, with a 5-year variable rate of 5.95% over 25-year amortization, the total mortgage amount would be just over $652,000, currently has a monthly mortgage payment of $41.57. If Canada's central bank announces a 25 basis point rate decrease, that mortgage rate will decrease to 5.70% and their monthly payment will decrease to $4,061. That means that the homeowner will pay $96 less per month or $1,152 less per year on their mortgage payments. Let's take it one step further, and what does that mean for the average Ontario homeowner? According to ratehub.ca, a homeowner with 10% down payment on a $900,161 home, which was the average home price in Ontario for 2024 in April, with a 5-year variable rate of 5.95% over 25 years, the monthly payment would be just over $5,300 at $5,319. If there was a 25 basis point rate decrease, that would go down to $5,196, which is about $123 less per month or $1,476 less per year on their mortgage payment. Those are numbers, and if the rate decreases by 25 basis points on June the 5th, that's where Canadians may start to see a little bit of relief on their monthly payment. That being said, if rates do decrease and we do see more buyers come to the market and activity pick up, the offsetting cost to purchase a property, and interestingly enough, the May numbers will be out the same day as the rate announcement. And according to the benchmark price data, prices have remained relatively flat from April through May. If there is any sort of increase in price, so for example, if there's a $10,000 price increase, that's an extra $2,000 when it comes to a down payment, which would actually offset that 0.25 basis point decrease for both the average Canadian home and the average Ontario home. It will be really interesting to see how the market plays out as we go along here into June and whether or not if that rate announcement has any impact on the Toronto real estate market. Most buyers that are looking for properties right now are generally pre-approved on the fixed rate side, and that fixed rate has been trending much lower than the variable side for quite a bit of time. As we continue through the rest of the year, if the fixed rate holds steady with where rates are at right now, in and around that 5 to 5.5% range, that could be significantly lower than the variable side, and that's still a big difference even if the Bank of Canada makes more than one rate decrease from now to the rest of the year. I'm curious to hear your thoughts on if the Bank of Canada will hold where they're at or if they'll make that decrease on June the 5th. I'm Michael Ouzas. Thanks for watching.